Ladies and gentlemen, thank you for joining Storent Holdings Investor webinar. Today, our hosts are Andris Pavlovs, co-founder of Storent Group and chairman of Storent Holdings, and Baiba Onkele, chief financial officer of Storent Holdings. My name is Jānis Dubrovskis, and I'm country manager of Redgate Capital, the sales agent of the bond offering. Today, we'll be providing you with an overview of Storent Holdings and its growth story and introduce you with a new bond offering. After the presentation, we'll have a live Q&A session. If you would like to ask your questions to the company, please use the Q&A section underneath the presentation. This webinar will be recorded and afterwards will be available publicly on Nasdaq Baltic YouTube channel. I'm now handing over the microphone to the presenters.
Good afternoon. My name is Baiba Onkele. I'm Chief Financial Officer of Storent Group, and I'm in Storent Group since the day one, so for 15 years. I will guide you through the Storent Holdings history, the future outlook, and numbers, financial numbers. So Storent is construction equipment rental company in the market for 15 years already. To say it in very simple words, we buy equipment, starting very small tools till the very big truck-mounted cranes, and we rent to our customers. And even more, we provide our customers with rental solutions. It includes also deliveries, operators, for some products, even engineer drawings, and also transportation services. We are leader in online and digitalization. In Latvia, we are top performer, and we have very strong position in Baltic markets. As well, the footprints in Finland and Sweden. We are very proud to be 100% Latvian capital. So everything started in 2008 when former managers of Ramirant Group, Andris Pavlovs and Andris Bisnieks, decided to make their own rental company. They attracted Icelandic investor with 4 million investment, and they invested 1 million themselves. So we started company together with economical crisis, but that gave us even more power to continue with company growth. So we opened the subsidiaries in Estonia, Lithuania. We continue with open rental depots in different kind of Baltic biggest cities. The next big step in our history was in 2014 when Darby Fund joined the Storent Group as owners. So that allowed us to expand to the northern countries. We bought the Finnish rental company, Leino. Now it's part of Storent Group. We started rental operations in Sweden from the greenfield, and very important also, we were very lucky to buy the Krama operations in Latvia. So that allowed us to grow much stronger and expand our geography as well.
About the latest changes in the company, yes, we started, as Baiba said, in 2008. Actually, all our history, we have been working through the many crises, always economic situation in Baltic countries going up and down. And it's actually, I'm always saying the crisis or some not stable situation in economic, it's very big opportunity for us for develop our business, to do something differently, not like doing some other companies. And actually, we always try to be proactive, try to understand the situations, what will be in the future, and actually make some necessary changes before. When we expecting that market will grow, we are starting to investment earlier and not waiting when the market will grow. And yes, the latest changes help us to develop the company further very quickly. We also established some split rent model at the beginning of our history in 2009. when a lot of companies had a lot of equipment which they cannot utilize, and we established model of split rent of equipment. Actually, we re-rented equipment of third-party equipment, re-rented to our customers. And one of these company also was Selectia, which bought at that time equipment and start to re-rent our customers through the Storent. And it's grew during 10 years, no more than 10, 12 years, 13 years, and became one of the biggest supplier of equipment for Storent. And we decided that in 2022 that much easier will be to develop the company together and go together, because they had almost 50% of our fleet. We had network, we have best people in industry, and we have very advanced IT systems and digitalization process going very fast in our company. And we decided to merge these companies under one holding company. And we bought out American investors, and also my partner Andris Bisnieks, which decided to focus on different activities. We have been working together almost 15 years, and after 15 years he decided to do something different. But I'm very happy that we can merge these companies under one holding, and we could continue together. Ariesta, it's one of my best friends. We graduated together with him from Riga Business School. We've got EMBA degree, both in this excellent school. And now we, after merge of these companies, have very good financial figures. And we already saw some questions about our covenant, about our debt EBITDA ratios. And it's very important to understand that previously we issued the bonds from Storent Investments. Now the company which will issue the bonds will be Storent Holding. And this is Storent Holding consolidate all results under one company. If we are looking on Storent Investments, it's one figures, it's not so good. If we combine together with Selectia Investments, it's absolutely different situations. We are very stable, with a very good figures company. We know what to do, how to do, and where to go. And actually, this is very interesting business, because we are trying to do this business differently, not like our competitors. We try to be most innovative company, not only in Latvia, Lithuania, Estonia. I would like to say that we are most innovative company in Europe countries. I am sure that in Europe we are one of the advanced rental company in these markets. Baiba will continue with the figures, and later I will join to the questions and answer session.
Thank you, Andris. And yes, I will continue with the numbers. So last year, consolidated revenue was 45 million, EBITDA almost 14 million, and operating net profit 2.5 million. As we said earlier, we are leader in rental process digitalization and online sales. We have 222 employees. In 5 countries, we have 44,000 signed customer contracts. We have 11% Baltic market share. We operate with the fleet over 140 million euros. And we are covering 5 countries with 26 rental depots. On the right side, you can see our consolidated Storent Holdings group financial numbers, and also our budgeted numbers for this year. So we plan to increase in the sales in the EBITDA and double our net profit this year. The sales growth is based mostly on the price increase as well as a capex program, what we continue to do this year. Our assets mostly contain from non-current assets, and the biggest part of it is the fixed assets, what we rent out to our customers. There is also some proportion of goodwill. On the equity and liability side, we are in very good situation. Our equity last year was 45%, and this year we budget that it will be 44%. And as Andrus mentioned, we have very strong financial ratios. So debt EBITDA is over between 1% and 2%. So here is the slide about our geography. So in Baltic countries, we are a general rental company who rents out very wide range of equipment, starting hand tools, the access equipment, earth moving equipment. This means tractors, mini excavators, also generators and scaffolding. So range is very wide, and the biggest part of Baltic market is covered by Latvian entity. It generates 35% of total Storent Group's revenue. Lithuania generates 22%, and there is 6 rental depots. Estonia is 10% from Storent total sales. We have 4 rental depots in three cities, Tallinn, Narva, and Tartu. In the Nordic countries, we are more specialized in specific product groups. So the biggest is Finland with 27% of total income share. We are in the 3 cities, Helsinki, Tampere, and Oulu, which is up in the north. And in Finland, we are specialized in access equipment and truck-mounted cranes. So we provide our customers with very specific and difficult solutions, what actually not many can do in the market. And Sweden generates 6% from total sales. We have 1 rental depot in Stockholm. Here you can see a slide of our market share. In Latvia, we are number 1. So Cramo operations, when we bought the Cramo in 2017, allowed us to take the place number 1 in the market. And we are very keen to keep this place number 1. In Lithuania, we have 9% of market share, and in Estonia, we have 6%. Of course, we aim to grow much higher in Lithuania and Estonia. In Finland, our market share is small, but this is also because the market is much, much bigger. So Finland is 1% and Sweden is 0.1%. So our strengths are digital transformation and IT technologies, what we use, the split rent model, what Andrus already mentioned. So that allows us to bring more equipment without investing our own money. So we have wide rental depot network. So in Baltics, we have covered the most cities where are the industries and construction works happening. Since day 1, our active sales was the very important point of our strategy. We were new in the market and we could get more market share just to being more active, to doing things differently. So each of our sales representative has a geographical territory, what he is responsible for, and he should know what kind of project is happening there, what projects are expected, and what equipment our customers will need in this project. So we really care about our rental fleet. So we have great technician team, which takes care for repairing and the maintenance. Of course, it's also important to choose correct brands and correct machines with correct setup, let's say. And of course, our management team. So I'm in rental industry more than 20 years and many management members as well. So we are very happy that people grow inside the company and from the, let's say, mechanic, it can be even to top management positions. So we like our industry and we like to provide customers with better solution and make better environment for construction industry. Here is our fleet structure by revenue. So the biggest group of incomes is generating by aerial lifts and working platforms. The second biggest product groups is earth moving equipment. The third is the telescopic handlers. Important product groups are also the cranes, site units. So each job site begins with the site units and fans. We are very strong also in generator equipment, and then comes all the other product groups. Our fleet value at the acquisition prices what are today is 123,000, but we have paid 93 million for that equipment when we bought it. So that shows how big is the price increase in equipment prices. The book value of our equipment is almost 27 million, but the market value significantly exceeds the book value. It's 50 million. So 84% of our fleet is our own, what we operate, and 16 is the split rent equipment, what we take in additional from our vendors. So we see that we can increase this proportion up to 20–25%. We buy the equipment from well-known Western producers to ensure the quality and to ensure also that this equipment is has good price in the secondary market. So we have very wide customer base, and during 1 year we serve more than 100,000 rental transactions. So our customer base is diverse. So top 50 customers generates 22% of our revenue. Right now we see that the Rail Baltic will give significant impact on construction market activities in the Baltic, as well as the other EU funds programs will be open and give positive effect on the construction volumes and demand for equipment. What is very important that our products we are renting out not only for construction industry. So usually with construction industry, people understand the residential sector. For example, apartment buildings, which we know right now is a little bit turbulent, but our customers are much wider. So we rent to factories when people build factories, the road infrastructure works, renovation product. So we hold a lot of quite big volume of scaffolding. So we can serve very complicated products like, for example, Rundales Palace, recently renovated project. So, and also heating projects for apartment buildings. Also, farming is our customers. That's seasonal, but still it gives additional possibilities to earn money. And also the military sector, which is growing recently very much since the NATO armies are coming here and making training. So we are reliable approved partners since 2010 for NATO armies. One of our DNA is, of course, to use the technologies and improve.
I would like to take my part in this for this slide. I would like to explain a little bit more about digitalizations, because This is one of our main competitive advantage, and this is actually we are doing in this field absolutely differently, not like our competitors. You have to understand that digitalization is not only because of digitalization. This is main target of all our digitalization efforts, actually improve efficiency of our employees, improve efficiency of doing our business. Actually, you have to understand the biggest companies in Europe, European markets, Loxam, number one, Boyles, Kilo2, they have targets to have online sales around 20% to reach in a next couple of years. During the COVID, everybody understood that this is a good way to sell something to customers, but they just started to do something at that time, at actually a little bit before COVID, maybe during the COVID time. We had our own online sales platform already, first one in 2010. Actually, from the beginning, we have been focusing a lot on doing things differently, more efficient. Also, this is only side of selling of our services. We today have 50% sales coming from online. Actually, our customers going to our web page or applications and making orders there. This is significantly increase our efficiency, and we are focusing not only about this sales channel digitalization, but also about the internal processes of the company. And actually, we are a company in which all the process absolutely paperless. We don't have anything on a paper. We starting from the order coming from the customers, getting back equipment from the customers. We are all this process is automated and everything happen smoothly and everything happen in the systems. Couple of examples. If order coming in our systems makes evaluation of the customer. System makes, is it good customers or not? What the credit limits we can give these customers? Actually, we are today have less employees than we had 2-3 years before, but we are doing the same sales, a little bit more. And today our sales per employee, it's close to 200,000 per year. And our targets, it's 250, 300. Actually, all digitalizations, it's not about the only digitalization. This is about efficiency, how we can make our business more efficient than our competitors. We were the first company in rental industry, I am for sure, and one of the first in general in the Baltic countries, which after banks, which start to use, for example, Smart ID. Today we are signing 90% of all our documents, agreements, delivery notes, return notes by Smart ID. This is also significantly increase our efficiency. And we try to use the modern technologies. We try to use most advanced technologies to create our back office and to create our online platforms. And this is not about, as I said before, only about the just everybody doing today and we will do. We actually, we are the company which changing the rules in rental industry. We are the company which actually shows the other competitors how the sales process, how the business process will be in a couple of years in probably in all rental companies. When we start to use active sales, all our competitors in Baltic market start to use active sales approach. when we start to use Smart ID, everybody start to look on this and decided, okay, maybe it's good to have also. And this is what I would like to say, is that we are most innovative and we are changing the rules in industry in Baltic countries for sure. Baiba, please.
Yes, and I will continue with the market outlook. On the right side, you can see the construction market's volumes in the Baltic countries and Sweden and Finland, where we operate. It's quite obvious that in Baltic countries we are very small, and the potential in Sweden and Finland is much higher. So that's why also we look to expanding, and one of the reasons to issue bonds is to be able to grow further. And coming back to the Baltic construction market, we estimate that this year will be with a slight decrease, but we estimate increase in two countries, Latvia and Lithuania, and decrease in Estonia. I will repeat that we see the impact of Rail Baltica project and also other EU fund finance the projects. We also, of course, served other industries as well. And on the left side, you can see the chart of so-called penetration rate. This means how much of the total construction volume is the equipment rental. We see that in Baltic markets, we are one of the lowest percentage, and in Finland, it's close to 2%, and in Sweden, 3.6%. That means that in Baltics, construction market has much more potential to grow, also taking into account the rising salary level and limited financing from banks to construction market. So construction companies more often choose to rent equipment to let's say put this risk on investments on the rental company side. And now I give word to Jānis with the bond issue conditions.
Yes, I will now shortly go over the main terms of the new bond issue. I would like to remind that any investment decision should be made based on the prospectus and final terms available on storent.com website. So just to highlight the key terms here, the new bond issue is 15 million euros. Maturity date is 21st December 2025. So this is a 2.5-year bond issue. Interest rate is between 9 and 11%. And during subscription period, investors can indicate the minimum level of interest rate. So it's 9, 10, or 11% that is acceptable to a particular investor. The main financial covenants are net debt to EBITDA, which for this issue shall not be higher than 2.5, as well as equity ratio limit, which shall not be lower than 35%. Issue price is 100 euros per one bond. Offering ends next Friday, June 16th at 15:30 Riga time. Results will be announced on Monday, June 19th, and issue date is June 21st. Listing on Nasdaq Baltic bond list will follow shortly thereafter. This is the third bond issue that Storent Group is trading on the stock exchange. Yes, just to recap how investors can subscribe. So if you are a current investor, then you may exchange Storent Investments bonds into Storent Holding bonds at a ratio 1:1. We have an incentive fee of 0.5%, and any number of bonds that you own may be converted into new ones. New investors can subscribe with cash through most of the banks and brokerage companies in the Baltics. One investor can submit unlimited number of orders. Investors can submit orders with different interest levels. And Yeah, so in case you have any questions, you also may contact Redgate Capital for further clarification. So thank you for the presentation. Now let's proceed with Q&A session. A reminder to ask your question to the company, please use Q&A window. We have so far received several questions before the webinar. I will start with two of them that relate to the bond terms and conditions. The first is what does type of bond unsecured bond means? Well, these are unsecured liabilities of the company. So Storent holding issuing bonds is like taking a loan unsecured. The second question is why there are three different coupons, 9, 10, and 11%. Well, with this approach, we would like to test market sentiment. Investors can indicate desirable minimum level of interest rate. And also this year, we have noticed that a number of other issuers have used a similar auction mechanism to test the market with their financial instruments. Now I will continue with the questions that relate to financial standing of the company. So the question is, debt EBITDA was mentioned close to 4, but covenants for bond issue says that debt EBITDA should be less than 2. How?
So as Anders mentioned in the beginning, there were recent changes in Storent group structure. So the previous issue was from the Storent Investments group, where the financial results are not so good, let's say, compared to the new Storent Holdings group. So we are issuing new bonds from the Storent Holdings, and I showed already the consolidated numbers, assuming that the group would work together for last year already, and there the net debt EBITDA rate was 1.4. So we are ready to commit for covenants for new bond issue, not higher than 2.5. So we want to expand our company, and we also assure that we will keep our finance ratios healthy.
Thank you, Baiba. Next question is, what are your projections for total sales, costs, EBITDA, and net profit for fiscal years 2023, 2024, and 25?
At the moment, we are ready to show our budget for this year. So as I showed earlier, we estimate the growth of sales around 10%, also growth of EBITDA, and double our net profit. For the upcoming years, our result will depend on the possible acquisitions and expansion more to Nordic countries. So definitely we plan to grow, expand furthermore by keeping healthy financial ratios.
Thank you. Now we can proceed with the online questions that we have just received.
Yanis, I would like to add a little bit to Baiba's answer, yes, about the bond and the results. We are planning to grow for the next couple of years. We plan growth. As Baiba said about the market, we are not so pessimistic. We expected that market will grow, construction market will grow in Latvia. It will be flat in Lithuania, most probably, according to our expectation. And will be, of course, the decrease will be in Estonia. But also our customer, as Baiba already mentioned, it's not only private house builder. Our main customers, this is customers who build civil engineering project, infrastructure projects, actually. And very important thing you also have to understand that still around 60 to 70% in different resources, different figures you could find, but construction companies still buying equipment and they have in their own fleet approximately 60 to 70%, and they are renting from 30 to 40%. And when a situation it's not clear, it's let's say not everybody expected some significant growth. Usually, as you know, banks very conservatives, and they don't want to give money to construction companies. And construction companies start to rent much more equipment. And in situations when the market decreased by close to 10%, as I mentioned before, we start our business in a crisis. Actually, we established in 2008. Our first sales was in August 2008, but in 2008, September was a crisis, and actually Storent knows how to work in crisis situations. And usually if the market decreased by not more than 10%, rental market still growing. And this is shows our historical figures also. And why we are issuing bonds? Because we need to grow faster. We can provide financing for our regular investments in equipment. We still have plans to invest every year in new equipment without issuing bonds around to our depreciation level. This is the normal level. In the next couple of years, we are planning a little bit more increase these investments levels and depreciation level. But bonds we issue because we want to make some new acquisitions. We see the potential to grow faster if we would buy some companies on a local markets on Lithuania, Latvia, Estonia, and also we had some targets in Finland and Sweden. This is the main reason of issuing bonds, because our banks, they are Baltic banks, they are very conservative, especially for M&A deals.
Thank you, Andris. Now the second question is, how do you plan to repay the bonds when the due date comes?
So our business model for next 5 years allows, we see that there is free cash flow for operating activities to repay the bonds, but most probably we will come with a new bond program. We see that bond financing is a good way how to develop our business. Of course, we also understand it's not easy to comply with the stock exchange regulations, and we have additional requirements from our auditors as well. But our experience allows us to keep our accountancy level and our financial statement level, so that we are able to issue the bonds. So
yeah, I would like to add also, we already did 2 times, and I think I agree to buy, but this is very good way how to finance our growth if we have ambitious plans to grow. But we have ambitious plans to grow, and our financial ratios will allow to do this and we want to grow very fast, not like only using bank financing. It will significantly decrease our speed of growth.
Thank you, Andris. Next question is, can you specify in more details the structure of your customers' industries? As you may understand, the investors now are cautious towards private commercial construction sector.
I already, I think, partly covered in my presentation about the customer base diversification. What I can say that the private customers actually is less than 1% of our customer base, and we focus more on B2B business. But of course, industries are much wider than construction and much wider than residential construction. It's more civil engineering, road construction, and as I mentioned, also like military didn't mention event, renting out equipment for events. For example, generators is very important product groups where we are leading provider. For example, for very big concerts like Prāta Vētra and other happenings, what is now very popular after COVID.
Thank you. Well, in which document you have described auction rules? How will bonds be allocated to investors based on their submitted order amount and interest rate? Yeah, so in brief, auction rules are disclosed in one of the announcements by Nasdaq Stock Exchange. We'll also add this file to the storent.com website for convenience. And in brief, the allocation will be done based on the provided interest rate by investor. And yes, here there are maybe not strictly defined rules for allocation in case of oversubscription, but Storent strives to have a stable and wide investor base. So the next question is, what is the strategy for upcoming years? Is it planned to expand in what services? I think, Baba, you already described the strategy, and that also includes some M&A activities.
So yes, we continue with our own CapEx program to renew our fleet and to invest in new equipment. And another part is M&A, what is planned in Baltics and also in Nordic countries. Of course, Baltic market is limited, but we say that some consolidation would be very healthy. And of course, the expanding more to Nordic countries. As you saw, the construction market is much larger, and we see that with our team, we can provide very high level services to the market.
All right. Next question is about historical financials. How was the result for the first quarter of this year, and how does it compare with the first quarter of last year?
So in the first quarter, we were in the line of budget. We also published it under Storent Investments quarterly report. So there is two financial Storent Investments group and also a new Storent Holdings group. And we still see that we will be able to realize the budget for 2023.
I think the figures which we have presented to you, it's absolutely realistic, which we will be able to reach this year in 2023. Actually, first quarter was, I think, some 4% growth, and in terms of EBITDA, we had 10-11% growth. Actually, profitability increasing and results sales also increasing this year.
Thank you. The next question refers to bonds. Can you please comment on why the bond issue has been structured as unsecured bonds? I assume it shall be possible to secure the bonds with existing assets of the group companies. I will maybe start the answer with the fact that this is the third bond issue by Storent, and it is actually guaranteed by one of the Storent main subsidiaries, Storent SIA. It's a Latvian company, also holder of majority of assets. And why not secure with the other assets? I guess here it is like a typical case where the company borrows money first from leasing companies, from banks as much as possible and at a lower rate. And afterwards, as also Andris mentioned, that banks are cautious and not financing, for example, M&A deals. That's why the company decided to issue unsecured bonds.
Yes, correct. Yeah, exactly.
Okay. Now another question refers to the use of proceeds of the issue. So here we have also in the prospectus we have disclosed that the proceeds raised from the bond issue will be used for potential M&A and capex, as well as to refinance current bond issue and outstanding loan to the previous shareholder. And the last question is how much of company current asset base is already used as collateral for bank loans leases and or other borrowings?
So right now I will not be able to tell exact numbers, but we have free assets as well. So for existing leasings, of course, the assets are the property of the leasings. We have additionally one collateral for the previous owner, but all other assets are free. Yeah,
So I don't see any other questions at the moment. So if you have anything else to ask, please write now, or otherwise you may also write us after the webinar, and then we'll respond by email.
Yes, I would like to ask everybody who is maybe we didn't answer to your questions and you not ask us. You can find our contacts, my email, my phone number, Baiba's email and phone number. We will be happy to answer any questions to any potential investors. It doesn't matter how much you are going to invest in our bonds.
Mm-hmm. So here is the another question. Are the pro forma financials presented audited?
yes, they are.
Yes.
Audited by KPMG.
Yes, we had auditors from Big Four from the beginning, and we had our pro forma figures which we presented today for 2021, 2022, and this is audited figures.
So we don't have separate pro forma report, but in a Storent Holdings consolidated report in the note 36D, if I remember correctly, at the end of report, you can see the result of the new Storent group and how this consolidation would look like if the group would be established in the beginning of 2022.
Mm-hmm. If I remember correctly, it's page of 58.
Mm-hmm. All right.
So,
and here's another question about bonds. So will Redgate or someone else provide liquidity support to the bonds in exchange? At the moment, the Redgate's role is acting as a sales agent. There are no official liquidity providers for the bond. So as far as I know, I'm aware for the previous two bond issues, there were also no liquidity providers. Investors could trade between themselves using a Nasdaq Stock Exchange infrastructure. Yes. So all questions are now answered. The recording of the webinar will soon be available online. Please.
One more questions.
Okay. Yes, so another question, yes, so on the use of proceeds, can you please comment on how big proportion will be used for refinancing of existing liabilities and how much for further investments?
Yes, we can. Actually, 10 millions will be used to refinance existing liability, 5 millions previous shareholder loan, 5 million previous bond program, and 5 millions for M&A.
Mm-hmm. Yeah, so the recording of the webinar will soon be available online. Please follow Storent announcements to stay up to date with company's news. Thank you for joining us today.
Thank you.
Thank you very much. And if you have any questions, don't hesitate, just ask and send emails or call to us. Thank you very much.